Hello everyone, it's Wednesday and the jungle is already noisy. Oil cooled down, the dollar is flexing, and the euro is just standing there saying, guys, what in the name of Mufasa's whiskers are we doing here? Are we hiking? Are we pausing? Or are we panicking? And with that being said, let's find out what's the word in the jungle. And this is where Goma comes in. Goma is my market gorilla scout. He climbs up to the highest point, has a good vantage point, does not offer investment advice. However, he spots the danger and the moves every trader, beginner or advanced, should be aware of. So without any further ado, let's go in and find out what Goma had to say. So first and foremost, let's start with oil. Oil cooled down. And at the same time, it brought the idea to traders and investors that inflation should also cool down and the dollar should also cool down. However, none of that happened, and I will walk you through the whole process. So first of all, let's start off with oil. Now, traders have noticed that the peace treaty or peace agreement or the situation between the U.S. and Iran is on a good path, and it also caused oil to cool down. So investors are thinking, oil is not flying so high. At the same time, inflation should calm down and everything would start being nice and merry and dandy, but it didn't. So in order to understand this, let me take you all the way back and start off from the beginning to give you a better picture. When Iran and the US started this duking out fight, it caused the Strait of Hormuz to close and oil supply to actually shrink. In other words, there was demand, but the supply wasn't there. And since the supply wasn't there, it pushed the price up for oil. At the same time, by doing so, it caused the level of inflation to actually start rising, and it did so in the Eurozone. Now, hold on to that. We'll get to that in a second. So when oil started cooling down, the price, because the peace treaty, the situation was going well. So when oil started cooling down, investors started thinking, okay, since oil is cooling down, hence inflation will start cooling down, and we're gonna see much better days, so on and so forth. Now, it didn't happen. Why? Because if we go a little bit further back, the gross domestic product data release that came out from the States suggested that the economy is still moving. Inflation didn't affect the economy. The data amounts came out good, not as expected. However, with that data release, it also gave out a hint or a warning that the economy is doing good, but when that happens, inflation starts to rise. So in other words, to break it down even further, when the country's economy is doing good, that means that people are spending, that there is demand, and they're moving forward. But at the same time, whenever there is demand, it has a tendency, it's law of economics, when demand rises, prices also rise. So with that being said, with that data coming out, traders were aware of the fact that the US economy is going good and that the inflation is at the same level. It's not subdued as the FOMC or the Fed in the States would like it. And it's signaled or more or less, added on the rising incident, on the tension between Iran and the US. Now, with that also caused the Eurozone to experience an increase in prices, in other words, inflation. So they were forced to increase the interest rate in the Eurozone. Now, again, hold on to that. We'll get back to that. So the situation, the scenario is as follows. By the rising cost of oil and the rising level of inflation, it caused panic in the market in a sense, or it caused uncertainty, which gave enough space or the chance, the opportunity to for gold to start rising in price. Because whenever there is a geopolitical event, an uncertainty in the market, some kind of small panic, gold is a safe haven, and investors shift their attention, shift their liquid assets into gold. Okay, so gold started increasing in price. Now, when that thing came in with the Iran-US peace treaty, things are gonna slow down, the oil supply is gonna be undisrupted. Everybody else started thinking, okay, so here we go. Now oil, it's gonna start dropping in prices, and at the same time inflation, because that same oil increase in price and increase in inflation made the Eurozone to experience an increase within a month's time of inflation. So that's why they had to raise the interest rate to battle the situation. Now, since we're talking about the euro, the European Central Bank and the president of the European Central Bank, Christine Lagarde, after she announced the increase on the interest rate for the Eurozone, came out and specifically said, listen up, people, I'll be as short as possible and as transparent as possible. We're raising the interest rate because of the oil incident between Iran and the US. So we're doing this just to cope with the situation. This is not something to cause panic. The Eurozone is doing okay, but it's forced to experience an inflation rise, and we need to deal with it. That's why we're raising the interest rate. It is not something that's going to continue going on. For the time, this is how we are going to handle it as the European Central Bank. So, when that happened, everybody was expecting the euro to gain. And that's what happens if you're a new trader. That's what happens. When the interest rate of a country or a section, such as the Eurozone, or any other country, let's go like this, increases, it has a tendency to increase the exchange rate or the price of the equivalent currency. So everybody was expecting the euro to climb up, but it didn't. I'll get back to that in a minute. We're going back to the US and gold. Now, again, gold was rising because of the inflation and all that. Oil, connected to it. However, what happens? Oil starts coming down. Thoughts of inflation should come down as well. They were connected. It should have brought the dollar down as well, but it didn't. Now you might say, why? Why is that happening? Why the dollar is not coming down, start decreasing against other currencies? Because, as I said before, when the GDP came out, it gave a picture that the economy it's moving forward. Even though there is high level of inflation, people are still spending. People are actually okay with that level of inflation. So it put the pressure on the Feds. And the Fed said, okay, for now, we're watching it. And pay attention to this. And we are going to wait for Thursday's PCE data release. PCE stands for Personal Consumption Expenditure, and it's one of the FOMC's favorite inflation measurement. So they're gonna wait to see how the PCE will come out. If it does come out, okay, the Feds would start thinking, okay, so the inflation, it might get a little bit out of hand and have to act accordingly. How are they expected to act accordingly? The first thing that they're gonna do, they're just gonna announce that there's not gonna be any rate hike, and any rate cut. And as a matter of fact, a couple of members from the FOMC, from the Federal Open Market Committee, did say that they are expecting at least one rate hike before the end of the year. So with that being said, the dollar just stayed strong against the euro. They said, not so fast, buddy, to the euro. Not so fast. You might be rising, but I'm going to rise as well. So if you watch the euro USD chart, you might see a downtrend. Why? Obviously, the dollar is gaining against the euro, but it's not just the euro USD. The dollar was gaining and is still gaining and was gaining against all the other major currencies. Now, when that happens, gold goes under pressure. Why? Even though there is uncertainty, even though there is tension in the market, when the interest rate stays the same or it increases, that yellow nice piece of metal doesn't give anything in return. However, currencies do. Why? Because the first thing for you to know, when you keep your money in the bank would pay you back interest rates. So people are refraining from spending. They pick up their money, they throw it into a savings account, and that's not just everyday people, even companies, investment firms, so on and so forth, because they're gonna gain in the long run, in the long term, from saving their money in the bank. Also, banks, when they give out a loan, they charge you based on that interest rate. So it's a chance for them to make money as well. So to sum it up, dollar becomes more scarce, and when there is not enough supply in the market, the demand is still there and it pushes the price up. So investors are thinking, no, 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 no. Now it's time to liquefy my yellow piece of metal into currency, because with the higher interest rate, I will get money. Otherwise, it's just a metal sitting there. So gold started sweating because there was a sell-off, then a little bit of a buyback. So it was under a lot of pressure, but it was sweating because it had no definite direction. As a matter of fact, people were guesstimating, I would say, that that gold would start dropping, and it did drop. Let's not forget that. Now, with that being said, let's go also into stocks and indices. So, with a higher interest rate, it starts putting a refrain into spending. People are not spending. Companies are not making money from sales from people who have money to spend. So, there was a pressure and a sell-off from both stocks and indices, especially in the tech sector. So oil starts making noise, giving the impression that things are cooling down and everything is going to go back to normal. But the Feds did not agree with that. And they gave out hints, and they said, we need to see what's going to happen. And if what it shows that would happen, that is the level of inflation not subduing, but actually staying there or even increasing, we will be forced to take action as well. And when I say forced to take action, meaning let's keep the interest rate where it is, okay, just to try and hold people off not to spend. And if the case goes, to the opposite direction, inflation increasing, we're gonna do probably a rate hike. Their tone was hawkish. It gave out that sense. So far, since Monday, this is the situation. Now, let's go back again and talk a little bit about the euro. So the euro did face the inflation level rising. They were forced to increase the interest rate, but they also specifically said that this is not something permanent, okay? It happened within a month's time. We're just adjusting to the situation. And as I said, it was expected for the euro to rise, but the euro again was held back like all the other major currencies because the dollar got up again and said, not so fast, buddy, stay right there. I'm also trying to handle the situation, so I'm right here. So they were duking it out. So the word from the jungle, according to Goma, is this: pay attention to both sides of the jungle, both the US and the Eurozone, and keep watching what's their next move. If they're going to increase the interest rate, most likely expect the dollar to go up. If they don't, and the dollar keeps cooling off because the interest rate already risen in Europe, then we're going to see the reverse. So as of now, what should you know? First of all, keep paying attention for the Iran-US or the US-Iran tension thing, because it's still hanging from a thin thread, and if that breaks down, we might see oil going up again. If not, it should come down, but at some point it won't come down too much, okay? So that's number one. Number two, based on that, if inflation starts to rise and pushes the dollar up, gold would start losing. Otherwise, when things go back to normal, chances are that we will probably see gold rising again. And the same thing would happen with stocks and indices. And with that, we summed up the word from the jungle. So keep watching all those three assets, their reaction based on what I just explained. And don't forget to pay attention on this coming Thursday's PCE, the inflation data measurement release. Because right there and then, on the spot, I'll tell you this. It is not always accurate, but for the most part it is. If we see that inflation is rising, expect the dollar to keep rising, expect gold to drop, expect stocks and indices to drop. Also, all the other major currencies against the dollar to show a downtrend as well. And with that being said, Goma and I wishing you good trades. Keep watching the market. Until next time, this is the word from the jungle. My name is Neo and this is Goma. Ooh, ooh. See you soon.